Hi, this is Wayne Wagner from Visionary Wealth Management. Today we're going to talk about your deferred comp plan. So many of our clients have access to executive deferred comp plans, DCP, EDCP, there's 1,000 other acronyms. They all function the same way. You're given an opportunity once a year, usually in the third or fourth quarter, to opt into the deferred comp plan for next year. So not only are you trying to do your family budget and plan family vacations and all that kind of stuff, you're trying to figure out what part of next year's compensation should you be putting away until some indeterminate point in the future. Most often people choose a lump sum at retirement or defer that money into an account that maybe is going to pay out during the first 10 years of retirement to help with the income or cash flow stream for those first 10 years of retirement. As clients have been more transient, moving between companies, these things very often get paid out as lump sums when you leave your company. So I want to caution against overusing these plans. I had a client early on in my career who I met him and he was just so jazzed that he put away 100% of his bonus and 25% of his income every year for like 18 years before I met him. He had like a $3.5 million plan balance. We strongly curtailed how much he was putting into the plan, but when he left the company, he still had $6.5 million in the plan. And guess what? It all came out at one time and it all got taxed at the maximum tax bracket. Awesome. Not. Right? So strategic planning with deferred comp plans is very, very important. Why should you use them? Well, number one, many companies, not all, but many, as you move past the income threshold for the IRS, which right now is around $285,000. So if your base plus bonus is in excess of $285,000, it's important to utilize a deferred comp plan because many times companies will continue matching your contributions to the deferred comp plan once they're no longer allowed to contribute into the 401k. So that this is the qualified plans of the 401k, that kind of thing. This is a non-qualified plan, and very often companies will continue to match dollars contributed above that Internal Revenue Code income threshold right now, again around $285,000. So number one, strategically use them for that reason. Number two, you may have specific years where you just know you're going to have a lot of expenses that year. I'll give you a personal example. In my world, I had my 25th wedding anniversary and my daughter starting college both in the same year. So what did I do? I put about 75 grand into my deferred comp plan to come out and be paid out that year. Why? Because I figured with those two huge unknowns on my schedule, I figured having an extra 75 grand running around in income that year would not be a bad thing. So you can use these plans very strategically if there's a specific year where you know you're going to have some really high expenses that are kind of one-off expenses. The big challenge though is that in my case too, the year before I was planning to do that, I changed companies, and when I changed companies, they paid out all the money to me. So I got the income the year before I needed it. So the big challenge then is strategically using these plans to plan, but we know that fate often has different outcomes than what our plans provide for. So we use these plans strategically for clients to make sure we're maximizing the match for from the company, number one. Number two, strategically planning for one-off events or big expense years if there's something that we can kind of see coming a few years or 5 to 10 years in the future. And then number three, clients who are really just trying to defer and stay out of a top tax bracket. Personally, I feel there are other strategies that can be better utilized to help manage your tax bracket when you're in those really high income years. And there's other things that are affected in your tax bracket and in your taxable income, things like overexposure to company stock, things like that, that probably can have more bang for your buck than overutilizing a deferred comp plan. But every client, every situation is a little bit different and warrants a customized approach. Here at Visionary Wealth Management, we're always here with perspective for the decisions ahead. If we can help you with your strategy around deferred comp plans or any other area of your planning, please don't hesitate to reach out. Have a great day.